Hello, everybody, and welcome to episode number 63 of Confessions of a Market Maker. I'm your co-host, Ray, aka All Day Ray, aka Errol Flynn, and joined here by my cultured co-host, former market maker, 20 years and current day retail trader, a former nightclub bouncer who'd spaz on you like Frank Lucas having blood spilt on his alpaca, a gentleman who's handled more paper than a mailman. I am talking about the infamous VWAP Trader One, JJ. How's it going,
Ray,
man?
brother Ray, how you doing?
I'm doing good, man. Doing good. It's nice to get back to a podcast just amongst us.
Yeah,
How's life been for you, man, in 2021?
great. It's been a good year. Weird markets, but it's been a good year. Things are very interesting. There's never a dull moment. That's for sure. And some decent trades.
Yeah, for sure. Definitely not dull. Exciting. A lot of drama this year, and that's what this podcast is going to be about. We plan on talking about recent events that have taken place this year. It's been eventful, to say the least. Hedge fund blowups, banks taking big hits. I mean, JJ, we got kids on forums YOLOing into bankrupt companies.
Oh my God.
People are collecting art digitally, including myself. And
Yep.
JJ, we still got people buying $50 costumes for their pets.
Exactly.
But with all that being said, we're at all-time highs in the SPY and the ES. I mean, what do you make of this current environment?
Well, I've been saying for a long time that people are borrowing money and just railing these stocks. And Bill Wang was just the tip of the iceberg. Bloomberg put out Wall Street Journal put out an article today, they said as of late February, investors have borrowed $814 billion against their portfolios.
Wow.
It's up 49% from a year, right?
Wow.
And that's the fastest annual increase since 2007. And the last time it was this high and it grew so rapidly was 1999. So it's been fueling. We know that because just looking at these markets, any trader can tell that this is not serious institutional buying. And even Rick Ryder from BlackRock came out and said liquidity is not great and we are running at the highest levels of cash. So who's buying this stuff, and it's the credit cowboys.
Oh, sorry, excuse me. Yeah. Crazy, man. Just a reminder to listeners, if you like to trade alongside JJ and myself in the supportive community of traders, join us at microefutures.com. JJ, now that we're post, the Wall Street bets and the Robinhood saga, how do you think this affects the psychology of the market as a whole and the participants?
I'm seeing a lot of people taking really, really risky trades.
Yeah.
And that's kind of scary always. It's from the other side of the coin, it's great for us because we can make money off of them, right?
Yeah.
Because they're just running around throwing money around, right?
Mm-hmm.
This is like the 1920s,
Yeah.
people are buying stocks in hotel lobbies where they have bucket shops. There's an entire industry in the UK and all over the world on this spread betting where people are trading these CFDs with little to no money down, and they're running these things, and these things are just algorithms, and they're just bucketing the orders. You don't actually own the underlying stock, you're just betting on the which way it goes.
Mm-hmm.
So there's money flowing through these markets like just ridiculous because of low interest rates. But what it's doing is it's creating a very, very scary market because we have a lot of people playing with a lot of borrowed money. And you know what happens when you borrow? Like Bill Wang, he went to 8 bookies and borrowed money, right? And none of the bookies knew how much money they borrowed from each one.
Yeah.
So in the end, because they don't talk to each other, this guy nailed everybody, and I don't know, he must have just been doing Red Bull and 8 balls and just ran himself to the ground,
Yeah. yeah, it's incredible. Speaking to the point, and I know me and you were talking about this today, about the whole like Wall Street bets like culture and how it being good for like the sharp traders, right? Because a lot of it creates a lot of good trading opportunities,
It does.
for some of us trading equities at least. And it's funny to me like that it's that type of culture is like promoted, Jay, right? Like this like YOLO, because these are the type of players I want to be at the poker table with, right?
Oh
Like
yeah, the
these are the type of
fish.
people you want to. And so like these participants in the market, yeah, it's crazy to me, but at the same time, it's good for traders like ourselves.
It's great for traders. When you hear the stories about how people lose their capital, it's heartbreaking. So
Yeah,
there's like
yeah,
creates opportunity for us, but it's I've talked to people. I know people who are short the Nasdaq at 1260, and they're 12,600. They're 1,000 points out on a short.
yeah,
Um, and if for the guys who are trading other people's money, they don't care because they blow up a fund, they go on vacation, they come back and raise a couple of 100 million, and off they go again. But for individual traders, to lose that kind of money, to be offside that far it's just not right. And the markets have kind of lost a lot of their two-way action because there's nothing but buying, and then there's no selling by firms like BlackRock and stuff. So there's a hoarding of stock. So I mean, look at Microsoft today. It's up almost 1% on 25 million shares. Like
yeah,
it's so thinly traded. Look what happened to Viacom. You tried to sell some stock, you cut the thing in half.
yeah.
You know, it's crazy.
Yeah, like especially a lot of our recent podcast guests, JJ. I've asked them about some adjustments that possibly like the hedge funds make to this, current environment, especially with a lot. I mean, maybe not so much as recent, but we've seen in the past few months a lot of short squeezes
Mhm.
going on. How do you think, like, because there's those short only funds, how do you think they approach an environment like that? You think they're just on the sidelines, or is there still good shorts? I don't know. It's just something I
You
think
know,
about, and I'm not sure if
I
you have.
haven't I haven't really heard a lot about from those short only funds. Usually,
Yeah,
they're in, you hear about Carson Block and of course, Andrew from Citron, but you don't really hear much about, these guys who are big short sellers because, the simple thing about the market is it's a business, right? So there's a business strategy. So if the business strategy is to take crap up, why don't you just buy it, right?
yeah.
Why would you
Go against
trade
the
counter
trend.
to that strategy
Yeah,
when
right.
the entire bid is moving the market up? And you're sitting there. I mean, even if you've got $30 billion and you're fighting trillions, you're not going to win.
Right.
You know, so it's the shorting is nice in the Russell and in the stuff that you're shorting.
Yeah,
I see you in the room, and you're picking those deals that that there's going to be liquidation because it's you run your software, you get your scan, and then you check out the company the way you were telling me.
yeah,
You're like, oh, we're looking for strategic alternatives. Hit the bid, right? Because the news release is just like, yeah, it might as well be a Walmart flyer,
yeah,
right? It's and that some company like our friends who've been taking people's money since 1876, are dumping, you know, dump truckloads of stock into the buying.
yeah,
It's
yeah, yeah.
crazy.
Yes, graciously taking your money since 1868.
Yeah,
Uh,
exactly.
Shout out to them. They know who they are. Yeah, so yeah, Jay, I guess it's a big difference between me shorting and the size account I have versus, $1 billion fund or something.
Well,
Um,
that's the thing because you at least and you come from the poker world, so you know how to protect your pot,
mhm,
right? And if last time I checked, you worked hard for that money. It didn't just fall into your lap. So, you have a protective instinct over your capital. When these guys trade other people's money, they lose a lot of that because they're going for the glory. And, they always get paid their management fee every month, whether they make money or lose money, right?
yeah,
And if the fund implodes, they just come back under another name and with some new strategy. And, oh, he's back now, after spending 18 months in France with his wife, after losing, $3 billion, and let's go again.
Let's go
You
again.
know,
Yeah, what a career, huh?
exactly.
So Jay, let's talk a little bit about Bill Huang. I believe it was 8 billion he lost, hurting several banks with him along the way. I think what Jay, I don't know what the leverage. I mean, maybe upwards to 8 to 1. I've read. I seen Credit Suisse saying that it's looking bleak that they can even churn a profit this year,
Yeah.
which is crazy to me, right? Because it's almost like these are like the masters of the universe. Like if they're losing money, should we be concerned, Jay? Like, like I look at them,
Yes.
like the casino doesn't lose; they're not supposed to lose.
Exactly. Exactly. You know, uh, the thing is with these markets, what has happened in this market is in the old days, brokerage firms and these banks, they were run by partnerships, right? So you had 60 really old, crotchety, weaselly men, right? That would sit together and hoard all the money, and they would look at the books every night, and risk was a thing because it was their own money. Now all these banks and brokerage firms are public, so the people who run them don't have any vested stake other than their bonus. So they're always pushing things to get a good bonus, and risk kind of goes out the window. How did they let this guy? He had 10 billion of his own money, right? His total positions were unwound, approached 30 billion dollars. Now, in a day where BlackRock manages 7 trillion or 8 trillion, 30 billion is not. When did it be okay? When did it start to be okay to lose 30 billion dollars? And
Hmm.
this guy should be thrown in jail, right? And the people who loaned him the money should be taken out and flogged, you know?
They might have, it might, maybe worse. I don't know. We, I'm sure things like that don't get reported, but like,
Yeah.
you know,
No kidding, right?
who knows what
Hey,
happens behind closed doors?
we
Yeah.
all saw that George Clooney movie. What the heck was it called? He was a lawyer and they tried to blow up his car, and he was playing poker. Um, you know,
Yeah.
I can't remember the name of the movie.
Yeah.
Michael something or the other. Michael, I can't
I
remember,
don't
but
think
he
I.
was a lawyer in the this big ConAgra type Trump company tried to kill him, right? Big,
Okay.
like Archer Daniels Midland, right?
Mhm.
Yeah, it's just the same thing.
Yeah. So I guess with this mm, I don't know how to call it. Maybe concerning environment or just the way I'm approaching it is like kind of with caution, right? For the listeners, JJ. Yeah, I don't know, maybe some actionable advice, like you as a trader,
Definitely.
JJ. Like, and I know you day trade, right? So you don't really
Yeah.
position trade, but maybe for someone who does position trade, um, maybe some advice in this type of environment.
If you're position long, trail your stops, right? Just in case, because the markets are very, very dicey right now. It also depends on your time frame. If you're buying something and holding it for 20 years,
Right.
you can always dollar cost average if it breaks, right? But if you are, in a swing time frame, make sure you get paid, because at the end of the day, we're not really out here for the glory. We just need to get paid every day or every week. Otherwise, the gut rate wrenching um, thing that the markets will put you through hell mentally. So you got to get paid for it. Don't go for the glory trades. Get paid every day, every couple of days. Take that money out. And if you're swing trading, use stops. You're swing long and you have a stop somewhere. And if it starts going in your direction, trail that stop just in case something crazy happens. Because these markets are not, on long situations, there's no selling. But when they do come off, the ranges are huge, right?
Yeah.
And when they do come off, they come off unexpectedly, and that's why I'm worried about our market right now, because it's been 4 or 5 sessions in a row where everything's just jammed. And if it doesn't start move to the upside, we're going to have a little bit of a correction.
Yeah.
But
Yeah.
timing
Yeah.
it is tough.
Yeah, JJ, I wanted to ask you, and I know, I'm not, I haven't traded ES in some time, and like, we trade different things. I'm
Mhm.
trading equities. But the volatility has seen pretty high um, as of late. I mean, at least like I guess like this year, speaking to like you've obviously been in the markets way longer than me. How do you think the volatility is like currently compared to maybe years past?
The thing is, the ranges are massive.
Hmm.
The price action in those ranges aren't really that volatile, right?
Hmm.
And it's just because we have so many short-term people with borrowed money pushing price up, and we don't have any supply. So it makes it a shaky sort of situation because if anybody comes in and tries to sell any size, the whole thing falls apart like a house of cards, right?
Yeah.
So that's like right now it's not volatile enough. I mean, we don't have a two-way market. There's no selling in the market.
Yeah.
And it's kind of it's creating we have the market, the Nasdaq and the ES are sitting on short positions that are massive, and that's what's holding the market up.
Yeah.
And you don't want a market held up by short positions. You want it to be held up with structural buys from longer term people,
Yeah.
because then if it falls, it has someplace to land. Here, if the shorts are the only ones buying and holding it up, once they're gone, good night, Irene.
Hmm.
That's what I'm worried about. So I'm cautiously long. I buy little dips.
Hmm.
I don't really do a lot of shorting right now in the ES because it's like getting a root canal without Novocaine.
Yeah.
You have to
There's not
sit in a
much.
short for 4 hours until the supply builds up, until the market sells off. So I'll just wait till it falls, hits one of my levels, and just buy it, put a stop in, and run it to the next level. And just buy those look below and fails, and
Yeah.
you know,
Yeah. I
and
couldn't
just wait
imagine
for
trying
those.
to. I mean, it's got to be tough for anyone trying to be positioned short in the ES. I couldn't imagine. Just like going against the
Uh,
grain. You know.
yeah, it's just going against the business environment.
Yeah.
And it's not a normal, like, the price action is, every day we go higher on less and less volume, and it's like creeping it up like the way I used to creep up a pink sheet stock,
Yeah. Yeah.
to get the price up as high as I could. Oh, a little bit more, a little bit more. Oh, okay, and then you just unleash a torrent of selling.
Right. 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 A follow up to, I guess, this question, JJ, which you saying with the wide ranges, and I guess that's kind of what I was probably trying to more get at, like volatility, like wide ranges, right?
Oh
Um,
yeah.
I feel like I know how you're going to answer this, but I'm going to ask it anyway for listeners. When we have wider ranges, do there's the people talk about like, okay, maybe wider ranges, maybe you widen your stop a bit because there's a higher chance to maybe get shaken out by randomness or whatever the case.
Yeah.
Is that advisable, or do you think that's it doesn't regardless of the range still have a tight stop?
I don't believe in using big stops.
Mhm.
And if the market okay, here's the thing. If you have $1 million account and you're used to trading volatility and big ranges, then you widen out your stops a little bit because you kind of know what you're doing.
Yeah.
If you're a new trader, right? And when you and I were trading, we could use like a 3-4 tick stop, right? Because the markets were so calm, right? And as soon as they changed, we went, whoa, stop trading for a bit, figure out what's going on, and try and adapt into that. And then when it goes to that, I would rather trade the extreme edge of those ranges than trade the middle of it with a longer stop. Because the problem is the ranges are so big because the market makers are not absorbing inventory at every level. If they had a big buy order from institutions, the ranges would be nice and squished, right? So they buy 100 here, and then they buy 100 here, and then they buy 5,000 10 points lower. So and then it just keeps dropping because they're not going to buy size unless it's really really at the lows, and then they buy it all and rip it all the way back up.
Yeah.
So it's not an easy market to trade when it's like that.
Hmm.
So I do a lot of sitting and waiting. Like today I took one. I know I didn't even trade today, and I didn't
Hmm.
trade yesterday. And I'll sit and wait until I get a trade that I like. you know
Yeah.
and if I have to wait a week, I'm fine, right? Because I would rather watch and see what's going to happen and then start trading actively after the situation resolves itself than being caught in the situation. You
Hmm.
know, I
Yeah.
don't know if that makes sense.
No, no, it does for
Yeah.
sure. All right, switching over to another market. I'm talking about the digital online market, I mean, cryptocurrency, it's hit all-time highs this year, Jay, and we're still like hovering relatively close to them. We got the introduction to NFTs. They're gaining popularity this year. Um, since we started this podcast, you've gone from knowing relatively nothing about crypto to like now I at least think I would probably say like a baseline knowledge. We've talked to a few
Yeah.
people who've had
Oh
crypto
yeah.
on the podcast. Um, how have your views or your perceptions of crypto changed as we've been in this venture?
I find it fascinating. At first, I thought it was the greatest scam on the face of the earth until I figured out because it's like you're selling nothing to people and they're buying it, right? That's like you don't even have to pay money to a printer to print up stock certificates, right?
Yeah.
I thought it was beautiful, right? As somebody who likes to sell people a lot of product, I think it's beautiful, right? Now the whole implications and now it's becoming real. I see China is creating its own digital currency, right? The first for a major economy.
Yeah. Yeah.
It's things change and guys our age, and that's the one nice thing about working with you and Fingers,
Mhm.
Dan, is that you guys keep that young perspective of the word on the street going because for people who are in their 50s, they're like, this ad might, but then I missed out on the whole crypto thing because I didn't take the time to understand it,
Mhm.
right?
Mhm.
And had I been more open minded at the beginning of it, I could have at least traded in and out of it, right?
Yeah.
So that is something definitely for people my age is to be open minded when this stuff happens. Now, don't get married to it and say I'm never going to sell it and all that sort of thing. Make your money and take it and get out, right? The NFT thing, that's even cooler. I mean, because at least you get some sort of, well, it's not something visually that's pleasing, right?
Yeah. Yeah.
That people like. So if you buy something for $29, right? And so okay, so it goes to 15. You haven't big deal, right? That's less than McDonald's, right? And at least you have something that gives you a chuckle, right?
Yeah.
But you know, buying them for 300-400 grand, if you got that kind of money to blow, sure, why not, right?
It's
I'm definitely one for those who stimulate the economy. I mean, go for it.
yeah, be a
You
good
know, I'm
citizen
proud
of
of
the
you all.
country. Yeah. Yeah, to your first point, JJ, that's why it's a pleasure like working with you, being mentored by you as well, because I um pick up from your experience, pick up from you working in the industry, you being historian of the market, right? And so we get both perspectives from each other,
Yeah,
right? And I think we're both
exactly.
and I think this is just a good point and a good key to investing is like being open-minded, right? Or like let's
Definitely.
say like you were resistant to crypto at first, you still listen to it and be like, oh wait, hold on, wait,
Yeah,
oh okay, you can make money, and because it's to the whole point too, JJ, right? Like it's like even if you don't
exactly.
believe in these things, who cares? A lot of people are making
Yeah,
money doing it. Get your money and get out,
exactly. Exactly.
right?
Right?
We're
Like,
all in here to make money. I think that's why we're all traders.
yeah, exactly. We're not philosophers, right? Or, I mean, it's like, yeah, sure, my opinion. Yeah, who cares, right? That's like, I'm on the bid, right? It's like,
Yeah.
it's just, and then I'm out and I made some money. And that's the thing because that's the really cool thing about it, because I come from that generation where you had to work for kind of a douchey boss,
Hmm.
like the guy in Office Space,
Hmm.
who kind of lingered around your cubicle, right? And you had, you got to pay your dues and you got to take all this abuse before you can move up. And people are just tired. Like young people are like, excuse my language, but fuck that noise, right? They're like, I want to make money, and not have to have like some lecherous boss sexually harassing me every day at work. Because
Yeah.
that's the way it used to be in my day, right? These guys, middle management were just like, they were like leeches. So the thing is, I think it's great that young people are making money, right? A lot of old people hate that. I don't know why. I'm
Yeah.
like, yeah, make money because what's the use of having $50 billion when you're like 87 and using a walker? Like,
Mhm.
like what are you gonna do? Buy a fancier walker? I mean, have money when you're young and enjoy it. What the hell?
Absolutely,
You know?
absolutely. Like one of our previous guests, Die with Zero, Mr. Bill Perkins.
Exactly.
Yeah,
One
yeah. And
of
I,
these.
I think, I think, Yeah, like another key concept too. Well, I guess it's kind of the same thing where we're talking of is I know a lot of people get turned off because they don't understand maybe like the technology, right? And that's okay. Like JJ, I'm a trader. I'm not a blockchain developer. You know what I'm saying? Like I don't need to
Yeah,
know how it works. Once I've made the determination that like, well, if, in my case, I actually do believe in these things, right? But let's say I didn't even believe in them anyway. Like just having like investing and trading knowledge, I think is first and foremost, as opposed to like knowing knowing how the tech works intricately.
exactly. Oh yeah,
or or like
yeah.
I've heard people say like because of the top shots, right? That's the basketball cards
Uh-huh.
online, or even like the physical trading card market. People are like, oh well, I don't know about the sport. Listen, like I'm not really a basketball person. All right. You don't, you just, you don't, it's more about the trading, I think, principles, trading,
Yeah,
the trading theory, as opposed to knowing these, specifics. I think that's more important.
definitely. I mean, I haven't watched basketball since Jordan played, you
Yeah.
know. So like seriously, right?
Yeah.
And but I'm all for people making money off of it, right? And trading it, right? It's nice to see people be able to generate some income in times like, in times of COVID and things like that. Just remember to try and keep some of it, from somebody who made money and, had a great time in their 30s, right?
Yeah.
Luckily I was able to do it again, but just, you always, put away a little, right?
Mm,
And don't bet the farm on any one thing, right?
absolutely not.
And try and have some income coming from, if you can get income coming from crypto, like see I still don't even trade crypto
Mhm.
because I'm just so involved in the ES. And my thing is like I just trade one thing well instead of three or four things badly, right?
Mhm.
And that's just my personality. I really need to focus, right?
Yeah.
Otherwise, I mean, I can manipulate 20 stocks, simultaneously, but retail trading's hard because you got to figure out what's going on,
Mhm.
right? When you're manipulating or working out stock into a retail buy, you control the situation, right?
Yep.
So it's a lot easier than having to figure out what the hell's going on all the time.
Mhm.
So I like to just focus on one market, but crypto would have been cool. But I mean, I looked at it, but you need a wallet or a
Yeah.
money clip or a fanny pack and this and that. And, I was like, oh, good grief. I'll just stick with the ES right now. But I really like it. And one of these days when I have time, I'll poke around in there and see what's going on.
Yeah. Yeah.
One of my trading partners who trades it, and but the ranges and stuff like that, it's pretty crazy.
It can be crazy. I know we have a few people in our room that are
Hmm.
very active in crypto, like day trading type active. I just buy and hold, Jay. You know what I'm saying?
Yeah.
I got like I'm only two things right now, but I'm just I don't fuss with it too much because, like you said, the volatility is liquidity. Who knows? A lot of going on there. Um, but the market has matured a lot, though, JJ, like the crypto market. So it's been interesting to see it evolve over the years. And
Yeah.
really that's come to it.
It'd be nice. Well, I guess it's not in the spirit of things to standardize it and have one monopoly on it.
Yeah.
That's probably why it's traded on different exchanges and people can arb it, and
Yeah.
the opportunities for people who have um, you know uh, quant skills and are able to code and stuff like that are just amazing. Because they can arb it up from one exchange to another. They can do all sorts of stuff.
Hmm.
So that's really cool because then it allows people to get creative, you know.
Yeah. Yeah, for sure. I think I guess like the last thing on the NFTs, I think um, I want to talk about it's it's almost insane, JJ, like the ROI on some of these NFTs, right? Because I think what makes NFTs very powerful and why I think it's good for like the collectible industry. So like like the art or the trading cards, music, etc. Because I think you see like look at something like the physical market, right? Like art, like art, sneakers, the trading cards. I think people like these things because there's like a limited supply,
Hmm.
right? Like we want what others don't have. And I think that's what gives the NFTs a lot of power is there is limited supply on most of these things. And so you'll let's say you get hold of something, JJ, that like it's sold out, right?
Yep.
Once these things sell out, like the ROI, like you're almost like minimum doubling like your price for what you paid. And that's like me
Wow.
lowballing it, right?
That's nice.
I mean, people are seeing like 1,000% ROIs on some of these things. I just that can't sustain itself though, in my mind, right? Like, there's nothing. What do you have in this world, JJ? Right? You just buy something, your ROI just goes up like a couple minutes later. That much. I can't
That
see that being a lasting thing. So I think, obviously, right. Approach with precaution and
definitely.
standard bankroll management.
Yeah.
Just for the listeners.
You really, that's a very important thing, And the thing is, it's nice that you and Fingers were able to get into this thing early,
Yeah.
right? Because your cost average is the lowest, right? You guys were in
On certain things. Yeah.
before it even you timed it. I think you were like, was it like a month early or something like that? You guys just like hit it and got into it and understood it, and boom, it took off, right?
Yeah.
It was really, really nice timing. Right. So that's beautiful. Just, always, lighten the load a little bit, sell a little bit, keep a little bit, you
Yeah.
know,
Yeah.
it's
Just going back
yeah,
to, it's like, hey, same trading and investing principles
exactly.
apply here, and I still think we are still relatively like early, probably in like the overall I don't know, market cycle, whatever you want to call it, but
Yeah. As long as interest rates stay low and these guys keep throwing money around, that money will flow,
yeah, I think
people.
I'm still using the pet clothing indicator, JJ.
Exactly. You
It's not
know,
slowing down. People are still buying sweaters. They're
for their
buying
cats.
they're buying costumes.
you know.
It's ridiculous. They got fur. You're gonna make them more hot. I feel bad for the dogs.
Exactly. So do I. It's I was on Amazon last night looking. I was looking for a power converter, and I saw a cat wearing a sailor costume. I was like, okay. It was like $70 or something like that. Somebody will pay that for a cat's
Yeah.
whatever.
I mean, at least I could see it like maybe a little more acceptable in the tundra where you live, right?
Exactly.
I'm down here in the tropics. I'm like, you're torturing your dog, man. It's 85
Yeah.
degrees outside. Get his knitted sweater off him. Come on.
Yeah. No kidding. Like, that's just cruel.
You know? All right, so let's conclude today's episode of Confessions of a Market Maker. If you guys enjoyed the podcast, please rate and review it for us. If you'd like to trade alongside JJ, myself, and a fun and professional group of traders, join us at microefutures.com. JJ, parting words for the masses.
Well, folks, you know, trade out there, trade well, just manage your risk, and just in the next couple of months here, just keep your head on a swivel, right?
Absolutely.
It'll keep your just and make sure you get paid, right? Because there's this business will it's a wonderful business, but make sure that it pays you, you know. And if you need any help, come see Ray and I, and we'll help you with that.
Yep. We gotta, yeah. Shout out to our room, a real fun community.
Hmm.
Laughs in there every day. A lot of
Some
characters.
great people in there.
JJ, it was a pleasure, man. It was good just, me and you chopping it up.
Definitely.
No interference from no one else. It was fun. Looking
Good
forward to
stuff.
that.
All right, brother.
All right. So for George, the Brown George Clooney, I'm Paulie Walnuts. Make sure you're using stop. So.
Good night.
All right.